What other would you say downsides, in your opinion, are there of infinite banking?
I'm going to get a little controversial here. Would you? Would you mind?
Go for it.
All right. So I would consider myself not just an IBC evangelist, but also I'm pretty draconian when it comes to something that I think has entered into the fray recently that I don't like to see, and I do see it talked about a lot, and that's where. Well, let's bring it this way. When I read Nelson Nash, one of the main concepts that he talks about that I think if he was still alive, he would be preaching this as well, is that you want to divorce yourself from the banking system because of the fractional reserve banking system that is basically creating money out of thin air through the 10-to-1 leveraging that takes place. You basically put $1,000 in the banking system. The bank can now loan out 9,000, basically created money out of thin air. And so again, IBC or infinite banking allows you to again divorce yourself from the banking system, which is corrupt. He talks about that a lot. He's preached about that a lot, and I believe him. What I see is entering into the IBC framework and talked about, especially in the last couple of years, is using banks to borrow against your whole life policies. And I don't think that's in alignment with what IBC is all about. I think that is going to get yourself more engrossed in the banking sector, and it's actually taking a pure and sound framework like IBC, and it's kind of adding some manure to the mix, to use to not swear on your program. And I find that very frustrating. So that's one thing that I think that I'd like to change over the next couple of years as things evolve. I'd love that people would be more purist about IBC. And I don't mean this to be insulting. I know you guys do talk about this on your show a bit. But yeah, I just feel very strongly that when you're using a bank to shoulder your investments through IBC, you've lost the script. You lost the plot.
You are right. If we get in the weeds with some of the IBC teams, there is a divide on using banks as opposed to policy loans. And great. What's interesting, Sean, and I'm really glad you brought this up. We're actually open to the idea of using banks. And so we've had these discussions. Well, for one, do we want to end the Federal Reserve? I mean, that's one, thought process, but then the other is what is best for the client. And sometimes those two contradict, but there is, believe me, I've gotten in many heated arguments. Like, what's the difference between a policy loan or a loan from a bank? I mean, how does that affect the fractional reserve system? And really, I don't think it does, but it's very interesting. If we could nerd out about the pros and cons of that. And I do wish Nelson could chime in on that, amongst other things, like particularly the use of the IUL. He was
did
very
speak to that. He talked about IULs quite a bit.
Anthony hasn't read his books.
Well, on page 69, it actually, no, not 59, I think. I don't know. It's 19. It's one of the nines. 69 is I can earn a higher rate of return. Mm-hmm. But he's very clear that he would never use universal life for infinite banking. And then there's thousands of people out there that are promoting it. Sean, what was the downside of you using and you incorporating infinite banking? What are some of the downsides that you've seen personally?
Well, gosh, I mean, downsides of using IBC. I'm struggling to find a downside. I think that I have all upsides for using IBC. Like I was saying before, the biggest downside to being an IBC practitioner is just constantly having to explain yourself when you're explaining it to other people and how it works. In terms of how I've done it, how I've used it, Yeah, I really cannot think of a way in which it has in any way taken opportunities off the table, or, if I'd done it another way in hindsight, would the answer is no. I would always and have always done IBC, and I think that it has, if anything, opened up. Well, not if anything, it has opened up far more doors than it has closed, and I don't think it's closed any. Is there a way that you're thinking of that I may be missing? I'm not.
Well, I mean, like I would have for me, one thing I think it would be nice if the premiums were a lot more flexible. You could put in 10 grand or 100 grand or zero. I mean, if the premiums or deposits were extremely flexible,
Well,
that would be nice.
you should have Tim on. It's like you said, you're going to have him on soon. We get in this debate quite a bit, and he tells me, he surprised me the other day. I said, "Oh, well, here's a scenario, right, Tim? The IBC would not work. And what if I inherited $1 million and I wanted to put that all into a policy?
Mm-hmm.
Now, that policy is going to mech. You can't just put $1 million into a policy as a one lump sum." And he goes, "Ah ha ha. Actually, that's untrue." And he explains how there's ways of basically setting up a policy that can take a one time
one and done, we call it.
One and done, and there's ways of structuring policies where it's one size you can put in a decent amount of money up front or have various lump sums along the way. And again, structuring policies can be done, at least according to Tim, very dynamically and always to meet the needs of the client. Whereas before talking to him, I've always been of the opinion that there's again, mostly due to mech limits, there's not a lot of flexibility there. But apparently, if you're a creative policy designer, and I think Tim is, you can come up with policy designs to meet any need, which I find really interesting. And I also, in my policies, I have a lot of versatility in terms of my premiums. I always design them to make my premiums what I know I can afford on a recurring basis. And then there's always room, should I have a windfall, to be able to, of course, either pay off policy loan or, more importantly, buy up with what Northwestern calls it a lump sum payment. Penn calls it a paid up addition, but they're called different things. But add more money into the policy to basically buy up additional insurance. And those, if a policy is structured correctly, will have room for those sort of mechanisms.
Sean, is there how long ago did you get your first policy?
I got my first policy from Tim about 14 years ago. Wow. And it was not IBC. So this was what kind of whet my appetite for, I didn't know anything about whole life. I was a young kid right out of school, and I didn't know much about anything. But I was talking to him. He was selling life insurance at the time. And I got a very basic policy. What do you call it? Your mama's grandma.
Your mama's whole life.
Well, yeah. So I got one of those, and even with one of those, after a couple of years, I saw its potential. Mm-hmm. And then again, I got the book, I think given to me by Tim. I read the book. I had my eyes opened, and then I just started gobbling up as many policies as the insurance company would sell me. I got on a first name basis with the health, what do you call her? The
examiner.
Examiner, yeah. She would come to the house. She actually made house calls, which was great. And she was just like, "Oh, you again?" It's just like, what's going on? Are you dying or something? Why do I have to see you so much? But I'm like, no, I'm just buying a lot of insurance. Then I made sure after the first couple that they were properly structured. I learned how important that was. I think, actually, let me revise my previous point about what the problem is with IBC. I would say that the biggest pitfall of this industry, the IBC industry, quote unquote, is that so few even insurance salespeople understand it and understand how to structure a policy correctly. Even in the IBC world, I find that I've sent policies over to, I'm not going to out them and be mean about it, but I've sent policies over to people I know for a fact are preaching about IBC, and even they don't design the policies correctly. So I find that extremely frustrating. Is like, how hard is, I mean, again, as a simpleton, I'm not in the world developing policies, of course, but how hard is it to just take the concept of make my death benefit as small as possible, make my cash value as high as possible so I can stick as much cash in there as possible and have access to it. This is a very binary sort of ask. And even still, you have policies come back and they're just like, this is terrible. I mean, they should break even after 7 years. That's kind of the, your litmus test. And if they don't, and if they're all over the place, then you've missed something. So I find that very frustrating, and I find it frustrating to constantly have to send policies back to say, see previous email on topic. So that would be a major con that I find in the pro-con list. But hopefully that will improve as more and more people like yourselves get out there and are spreading the good message and are educating individuals about how to ask for these things. I think it can only improve from there.
And that's why they have the Nelson Nash Institute, where agents need to be certified and held accountable and make sure they have some proper training, because it's so difficult for somebody to determine watching a video or seeing something on TikTok to really know how well somebody is in regards to infinite banking.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.